All right, welcome everybody. Hope everybody had a good day today, although it would have been a tough day to have a good day, wouldn't it? So anyway, we're here for Ticker Talk, and we're going to take a look at the overall markets, and we're going to get into some of your tickers, and see if we can figure out what's going on, and so we come up with a plan. And so says, yeah, it was a good red day. I'm not sure if it was good or not, but actually it was good in one of my accounts. It's good in my trading account, but it was bad in my long-term account. And DTG has made a huge mistake that might cost me tomorrow. Well, a little later on, after we go through an overall market thing, maybe if you don't mind sharing that with us, maybe we'll take a look at it and see if we can figure out a way out of it for you. Happy to help if you need a hand with that. Oh, Callie, right on. And James, cool. Welcome. Oh, they don't have audio yet, so they don't know I'm welcoming them. Hey, James, how's it going? And Callie, nice to see you, Callie. We have a small group here today, but look at a group of Discord veterans here today. I love it. Yeah, this will be fun, or we'll try and make it fun, even though the market was not fun today. So yeah, we're just about to get into it. So we will get rolling. You guys know the deal. No financial advice. Trade at your own risk, yada, yada, yada. You know who I am. We'll just skip right over that one. All right, let's get into looking at the market. And of course, as always, if you have any questions, feel free to interrupt or put your questions in the chat. So let's start by looking at the SPY. All right, so what's changed since the last time? So last time we were here was 2 weeks ago, right? What's the date today? 304, somewhere around here, I guess. Around the 15th, I think, was the last time we were here. Oh, right before it kind of fell off a cliff here, probably. Yeah, I bet you we were pretty bullish last time up in here, right? Sitting on top of the 200-day moving average, everything looking like, yeah, this should pop. And of course it didn't, because, you know, it looked like a war was going to start. And then sure enough, a war did start. And this was just a beautiful day here, and the follow through the next day, that was all good. The little inside day we had 4 days ago, so this would have been Monday. Inside day, no big deal, right? And then Tuesday we opened and tried to attack those highs again, and then pulled back, right? Came down and found the support and bounced. So I looked at that as like, all right, you know, we're closing inside the range from Monday. This doesn't look so bad. And then sure enough, yesterday, you know, we had a nice strong up day. Yesterday was a great day, really nice rally yesterday, and it was really broad, you know, across the whole market. You know, all of my accounts had a fantastic day yesterday, and I'm sure yours did as well. And then today, I mean, today just sucked. You know, if you're in anything growthy at all, doesn't matter if it was large cap growth, small cap growth, it was just down big time. I mean, some of the names, you know, James, you mentioned some names to me, you know, Playboy and CLSK. There was one more you mentioned, I can't remember. I'm in Square, and it was probably my worst performer today. I mean, it was down something like 9%. So, oh yeah, Celsius. Thanks, James. Yeah, so ugly in the growth stocks today. Very risk-off day, as we'll see in a minute, and defensive stocks did really well. So that doesn't really bode well for the upcoming couple of days. I'm not sure what the market got all nervous about all of a sudden, you know, because the market has done it's such a great job of sort of digesting just an incredible amount of negative news flow, all the stuff that's going on in Ukraine, you know, all the stuff's going on with, you know, world economies because of what's happening in the Ukraine. And we've got, you know, Powell testifying yesterday and today, although he was quite, he was fairly dovish yesterday, pretty friendly with his comments to Congress yesterday. Or I guess it was to the House yesterday, if that's the right term. He was pretty dovish. He said he would support a 20 or 25 basis point rate hike. Made it pretty clear that it's not going to be a half-point rate hike. And the market liked that. The market really liked that. And that really helped us rally all day. Today, he was a little more hawkish in front of the Senate, and that doesn't surprise me too much. The Senate are probably asking better questions than maybe the House was. And maybe he was just trying to dial back some of the enthusiasm in the market, from his previous statements. So, like I said, not an ideal setup for tomorrow. However, we're still inside the range of the last number of days, right? We've still got a bit of a bull flag here. However, there's definitely an upwards tilt to this bull flag. Here, I'll just draw this in. And those ones that tilt upwards usually fail. So when you see a shape like that, that's usually kind of like, we could almost turn this into a pennant or a wedge or whatever. There we go. That's a little better. When you see a shape like that, these kind of bull flags often fail. Our preferred, I think all you guys know this anyway, but I'll just mention it. Our preferred kind of bull flag is one that looks like that. This one looks like a real flag on a pole, right? And those are the ones that work better. So, we'll have to see how this plays out. It's not awful or anything yet, and we're still up pretty high, right? And we're into that previous gap zone and this whole kind of resistance area, and it's really bad that we just sort of gapped up and came down all day. Usually there's another red day that follows a day like that, where you sort of try to break out and then just fail almost instantly. They're usually followed by another red day. So if that's the case, maybe over the next couple of days, we've got to watch out for this support level down here. Should be 428 as an area. That's sort of our last line of defense, really. We could probably draw in sort of a very sort of tentative support or an area to watch right in around here, 430 to 431. If we pull back tomorrow. So that's a SPY. And I think, when we go through the other indices, we're going to see something very similar. The Qs, very, very similar kind of thing. You can see that upward sloping bull flag. This one stopped right under resistance. So, it broke out of, this little 3-day resistance here and went into resistance I've got going way back. So very much, failed at a resistance zone before breaking out. You can see the 21-day moving average there. So not much more to see there. IWM. Okay, so IWM fell out of that wedge that we'd drawn in last time. Let's get rid of that just to clean this up. And, same deal, that upsloping bull flag, and, tried to break out of it to the top, to the upside, and just failed. But again, still inside the range of that flag, right? So things are not completely broken yet. This can repair itself. I want to look at, so that was IWM, that's the Russell 2000. These are, this one is IWO. These are the small caps in the Russell 2000. And this was down quite a bit more today. So IWM was down 1.18%. IWO was down 2.09%. So you can see the small cap growth just got hammered today. But if we're looking at bull flags, this one has a healthier looking bull flag. Because it's, it's more squared off. It's not really tilted up like the others we saw. I don't know if it's worth reading anything into that at all. But what else should we look at? We should look at yields, because that's kind of becoming a thing again over the last couple of days. So you can see that, yields have been, bond yields have been dropping right off, and then started rising again. This is the 10-year, by the way. Started rising the last couple of days. That's interesting, and especially interesting considering we saw a flight to safety in the sectors today. usually if we're seeing a flight to safety in the sectors, we're also seeing flight to safety in bonds, and we didn't really see that, right? Because they're kind of buying them today. I guess yields are down a little bit. I think that was a late day thing though, because I believe, if I'm not mistaken, that yields were green most of the day. And same here. So, a little bit of an indecisive candle here on the 30-year yield. Maybe this will roll over from here. The yields, you can see, don't like these indecisive candles so much. They tend to, or the last couple times we've seen those, they've moved down out of there. So, hard to say. It's really hard to predict yields. Bonds are tough and very headline driven as well. Why don't we look at some of the important commodities, because there is a lot of action going on in those. So we'll start with oil. And as you can see, oil has just been on a tear, right? Beautiful uptrend here and then totally accelerated here. And when I saw this the other day, I trimmed some of my oil and general commodity holdings. So I've got a Canadian oil company that I've done really well in. I've had that for a long time, like over a year. I have XLE that I'm doing really well in. I also have GSG, which is more of a general commodity ETF. And obviously that one's doing really well right now. So when this blasted up like this and then started to pull back, I thought, this is really looking like a blow off top. It didn't have a ton of volume yet, but it was kind of early in the day when that happened. And so I started trimming some of my oil related stuff, just trim small amounts. And then, we continued to go up yesterday, which was really nice. And today, we opened and went up today and didn't really start pulling back until later in the day, if I remember that correctly. I'm just going to pull up a 5-minute chart of that. Where's our open? Yeah, here. Oh, okay. I guess, yeah, we went up, from the equities market open right here. We did go up and chopped around and then kind of, mostly drifted down most of the day. But, considering there was talk of ceasefire and whatnot, we didn't actually pull back that much. And you can see we closed inside the range of the day before. But this doesn't bode especially well for oil, which I'm sure will make DTG happy if you're still in it. So hard to say. Again, another real headline-driven commodity. This was affected today, but more by Iran than anything going on in the Ukraine. If you didn't hear, there were pretty strong rumors just before the open this morning that an Iran nuclear deal was about to be signed within the next 48 to 72 hours. It was basically all done. They just had to dot some I's and then they were going to sign it. That rumor appears to possibly be false. But oil did start to drop on that, because if there is a nuclear deal with Iran, a nuclear weapons deal with Iran, that means the sanctions will be lifted. There's no way they're making a deal without everybody lifting the sanctions, which means they'll be able to export oil again. And they're a fairly large producer. They're about a little less than half of what Russia produces. And they probably could ramp up. They're not producing very much now because they have limited markets to sell it into. They sell it into China, and I'm pretty sure they sell it into China, and they sell a bunch on the black market. But if they have access to global oil markets, they could sell a lot more. So that brought the price of oil down. And I think another thing to consider, if you haven't read the morning briefing, is, this might add a little pressure onto those voices who want an energy sanctions on Russia. Because if we can move to Iran to get the oil and replace Russia's oil, mostly for Europe, that's got to be that's got to give, they've got to be giving serious consideration to, okay, we can put more pressure on Russia by putting sanctions on their oil exports. So yeah, some interesting developments there. it's hard to keep up with all this stuff too. There is so much going on right now on the the global macro and the geopolitical landscape. So that's oil. Gold had a half decent up day, continues to climb. It's got a nice little uptrend going. Kind of, looks like it might have topped out a little bit here. I'm not sure if this is a bad, oh, this is the day that war started, right? So, maybe we've got a little bit of resistance up here in this, what is that, 1950-ish area. So it'll be interesting to see what happens there. If we have another update in this tomorrow, can it get through there and keep going? Yeah, no reason not to like gold at the moment. It's looking pretty good. Silver's much the same thing, no doubt. Didn't go up as much today, and is a pretty strong, into pretty strong resistance right now. Let's draw that in. That level right there. So what is that? Yeah, 25.50. This looks a little consolidation right underneath that level, right? I love that. This looks primed to break out here. So we'll see what happens if there's any, if we get any more fear into the market, especially from the war end of things, this could easily break out here. The commodity that's really killing it, other than some of the grains, is copper, especially in the last few days, right? Broke out of this consolidation, strongly in an uptrend here and coming into resistance. So, we should probably draw that resistance in, which is going to be, somewhere in right about there. I'm in some copper plays as well. Oh, Richard, that's too bad, man. Yeah, because that, this, it's hard to say. It's used a lot of energy coming up into this resistance level. Commodities are tough, right? It could keep going. Once they get going, they tend to go for a long time. And you can see that on this move here. This had a really nice move, although it did stall out right near that previous high. So this will be interesting to see what happens with this tomorrow. If this breaks out of here tomorrow, I mean, it could really go, because I don't know what's above that ever. Yeah, I mean, we're into basically all-time highs on this thing. How far back do I get to go? Okay, yeah, that's as far back as I can go, back into the 80s. Cool. Yeah, I mean, when we look at it in this context, what do we see here? This is an absolutely beautiful looking bull flag, isn't it? You got to play this breakout. Find a way to play it. If we break out to new highs tomorrow, play it carefully. And this is not investment advice, but you can play it with, oh, there's a copper ETF. I think it's JJC. Yeah, this is the one. This might be a good way to play it, because this is basically, this is a play on the physical copper. So that one is JJC. That would be a way to play copper. Could be pretty interesting. Another one, or a couple more that I like. My favorite copper play is Freeport-McMoRan, FCX. I'm in this now. I've got calls on this. I've been in this for a while, actually, and I've already, or quite a while ago, actually, I think it was here, pulled off half my calls. But I still have them left. They're doing really well, obviously. And you can see that this one has broken out to new highs. And I'm pretty sure that that's all-time highs in this. Oh, no, not quite all-time highs. So do we have any, let's go to a weekly on this and see if there's any resistance overhead that we need to worry about. So these highs go back to 08 and 11. And looks like there's a level right about there. So let's draw that in, because I think this could be a really cool play. I mean, there's a bunch of swing traders in here right now. So, let's talk about these potential plays. I think we'll just sort of draw that in there. Do we need to get this level down here? Probably should, eh? because this one kind of has worked from the past as well, and it's right where we're sitting right now. The looks of it. Or we just went through that level yesterday. Yeah, okay. And then, you know, you've got the all-time high up in here. All right. So yeah, so there's some levels on the upside that we want to watch out for if you want to go in and play that or play copper with FCX. We'll go back to a daily now. And take a look here. So, you know, you can see we had a really nice base going in this, right? You know, for quite a while, for about a year, I suppose. Kind of in here. It's a little bit messy. There's kind of a couple levels here that could be important if it starts coming back down. Obviously, you don't want to ride it all the way back down to this, right? If you're going to play this breakout or a continuation, really, it's already broken out, right? If you're going to play the continuation of the breakout, you probably want to play the, you know, the breakout of this flag right here. So let's go to a 65-minute chart and take a closer look at that. So, you know, I mean, this is probably pretty simple here, right? You know, just basically draw a line across here and another one here. You know, the way I would play this, I might actually add to my position. You know, the way to play this is just basically play the breakout, you know, tomorrow morning. It's probably going to gap up or something. It's probably going to open above this anyway. So do you want, you know, do you just want to go in right away and then you'd put a stop just below this range, or maybe you put a stop just below today's candle? You know, we can see what that would look like. Whoops. You can see what that would look like if we put a stop. So, you know, I mean, if you're, you know, if a wide stop is going to be down here and around, you know, just about 47 or so, a tighter stop could go here, you know, just above or just below today's candle. So that one's just above 48. And, you know, if you want to be a little more conservative with it, you could wait for a breakout above the high from back here on, when was that? March 1st. But you know, this to me looks totally ready to go. So that could be a nice play for copper. TECK is another one. You can see, oh, we're on a 65-minute chart. But you can see on, you know, on the 65, you can see nice uptrend, you know, goes up, takes a little break, goes up, takes a little break, goes up. This looks like it has a little more room to continue here, you know, comparing it to the last little up moves. It's nice and strong. Let's go to a daily. So yeah, this one's already run quite a bit, so this might need to take a little break here. You know, maybe, you know, you see a little bit of a consolidation, draw a little bit of a bull flag like FCX did, and then play that breakout. I kind of wonder if people will start to, you know, maybe rotate from this one into FCX for the FCX breakout. And then when FCX has a nice move, maybe they come back into this. But TECK is also worth keeping an eye on. I'm just, it's already run so much just in the last week. That's a tough one to get into. I want to see how, there we go. So from that open, yeah, so that's like, that's already 18% from the open back here, you know, just over a week ago. So yeah, this thing is going to need a break soon. So I wouldn't suggest you just go jump into this one. So that's copper. The other one we could look is natural gas, not much going on there. And I doubt that anybody here wants anything to do with the grains, except that we can look at a couple of agriculture ETFs, because those have been, oh, sorry, wrong one. There we go. These have been doing quite well too. This is DBA. It's an agricultural commodities ETF, and you can see that this thing has just been in a beautiful uptrend since around June of 2020. We should have, you know, back in June, we probably should have sold all our growth stocks and jumped into this one. So yeah, this has obviously had a really decent move. Not really showing any signs of slowing. you know, had this big, well, this is the war pullback, right? But it's taken it right back. You know, we've gone right back up. Tried to break out above there. It's so far like holding right at that level. So maybe there's more in this. Wow. I'm just reading what DTG just wrote. He says, hate being that guy, but if you bought wheat contract last week, today it's worth 150K. I can't remember what the nominal value, what would the wheat contract have been worth if you had bought it last week? $50 per point. Okay. Hindsight should have been obvious with Ukraine. You're right. You're absolutely right. And also Russia being a huge producer, right? We should have maybe thought that we would see sanctions on their agricultural products. Yeah, that one should have been a no-brainer. And these are the things that we should really be talking about, like in short-term trading or something too, right? When we have ideas like this, although none of us had that idea, right? You know, maybe I should have been bringing up some of this copper and oil stuff in there. Yeah, you know, anytime anybody has an idea like that, where you make a connection between, hey, you know, if Russia invades and they put sanctions on, you know, then you're not going to get wheat out of Russia or Ukraine. Wheat should be going up a ton. And, you know, we can get in on that. And you can see that people were getting in on that, you know, in the run up to the invasion. You can see that wheat was moving up quite nicely in that run up. Or no, not wheat, but sorry, agricultural commodities as a whole. Another good one, and this one I don't think has run as much. This one is kind of agribusiness. So this includes, you know, some of the big, you know, mega farm companies. It includes some of the suppliers to the agriculture industry, like Deere, I think Caterpillar might be in here. So this is an interesting play, but kind of similar to TECK. It's already had a nice run over the last week. You know, it's gone from 90 to 98. An 8% move is fairly large in this ETF, right? But it's built a huge base and it's potentially about to break out of that. So this could be a good play. And I do have a small position on this. I bought a position on this, I think, on that day right here when it broke out of this little flag. You know, started a position in this thing. You know, worked great for a couple of days, and then I suffered for a week or so. But I'm liking it again today, or liking it again now. So that one is Moo. That one has potential. And we should also look at DBC, which is a more general commodities ETF. Got a lot of oil in it, and that's why this one has been so strong. So this has run an awful lot too, and you know, I don't know. It's hard to recommend anybody go in this when it's run up this much, right? It may have run too much. Oh, sorry, wait a minute, that's the wrong. This is its relation to SPY. I clicked on the wrong link here. I apologize. But you can see this is how it has performed relative to the S&P 500, and obviously way outperforming S&P 500. This is the ETF itself. Okay, looks kind of similar actually, but yeah, you know, nice long uptrend, and that is starting to, much like we saw on the oil, crude oil. You know, it's starting to look like a bit of a blow off top here. Tons of volume coming in, really sharp move. But again, commodities can do this and really start to go and have huge moves before they finally just sort of collapse. But another one, if you're looking in that commodity space, another one is I swear it was GCG. Hang on, let me look. I'm just going to look this up really quick. Where do I have that one? I should know the ticker. I mean, I've got it in my, oh, GSG, right? So I've been in this one for quite a while. When did I buy this? I think I bought this here or back here. Here, I'm going to look that up. GSG, October 25th. Yeah, back here. 25th. What's that, September? Oh, I bought it in here. Yeah, okay. Yeah, obviously I took heat on that, but I was so convinced the commodities were going to run. And I know I added a bunch when it came out of this here. And that's moved really nicely ever since. But again, like, some of these have been looking at, it's really starting to look like a blow off top here. And I have been trimming through this. Every day I'm taking a little bit more off. I still really like the space, but I think it's getting overdone, and it's going to need to pull back probably to the 21-day moving average, maybe consolidate for a little bit and then go again. But commodities are hot right now. It is the place to be. What else? So we can look at some of the other ETFs. This is energy. It's gonna be similar to what we've got, going on. It is drawing a bit of a bull flag, which is interesting, especially, it's sort of the way oil's been looking. Interesting to see how that'll play out. And that red line there is a little stop reminder for me, because I have a position in this. If that stop alert goes off, I'll probably take off at least half of the position, maybe more. I might come all the way out of it if oil doesn't continue to run. Metals and mining, this has done really well, obviously, with gold and copper going out. This is broken out of this space. This is actually pretty sweet here. This is really textbook, right? We've got this base here, nice long base. Really well-defined base. I mean, you could even just play mean reversion on this, inside of this range, right? And then it finally breaks out, pulls back, touches the breakout level, and then takes off. Totally textbook. Unfortunately, I wasn't in this because I was in commodities and metals so many other ways. I didn't actually play this, but this would have been a really nice play. Sort of commit this to memory. When you see this big base, right, you break out, you pull back right to it, and you draw a hammer there. Let me zoom in a little bit. You come up, you break out, you pull back, draw a hammer. You got to buy the open the next day. I mean, you can put a stop, halfway down that hammer or something, or back inside the range. But you really got to, once you break out the high of that hammer day, you got to buy that. This is just, beautiful textbook. They put trades like this into trading books, right? Industrials have been doing fairly well off of, after doing quite poorly. You can see that they broke down out of their base. I'm actually going to move that line down to here. They've been chopping around, building a base, and then broke down out of it, and then came right back. This is some pretty powerful action, but it seems to kind of be slowing now. So it'd be interesting to see what's going on, or what happens in here. This is likely, this is the day the invasion started. So it's quite likely that a lot of the aerospace and defense type stocks are in XLI. I'm positive that Boeing's in there and stocks like that, right? So that's probably what, one of the reasons for the big pop in that one, in industrials. But I've also heard a little bit more talk about infrastructure spending again. I doubt that goes anywhere. What else should we look at? Financials have been kind of like, nah. Financials look, really look like they're trying to hold up. They've come down to the bottom of this range, kind of bounced a little bit. So hard to say what happens. I mean, they also look like they just roll over and start breaking down through, right? What else? The stocks that have been doing well this week, or the last couple of days anyway, are all the defensive stocks. So healthcare. Healthcare has had a nice move here, and it held up well today. A little bit of an indecisive candle here with that doji. It is, of all the defensive stock, this is the one that sort of down the bottom of the list for performance. REITs did fairly well today. Look like they could continue, although coming into some resistance with all these moving averages overhead. Staples, they have been holding up quite well through all of this. I mean, they took a big dump on the day of the invasion, and they didn't get all of it back that day, but they certainly did the next day, right? And now, see, I guess last time we had drawn this triangle in, obviously we broke out the bottom of it, went right back in, right? And now it looks like, we're maybe trying to break out the top of that. But staples don't move very much. I mean, look at this move, right? From the low down here, just above 72. And where are we now? We're just under 76, right? So this is less than this looks huge, but it's less than a $4 move. This is only, what, 5%, 6% in this? So it's not that much. You're not going to get a whole lot of action out of this, but it is kind of a safe place, or it seems to be a safe place to put money right now. And utilities had a really good day today. And have been having, a series of good days. This looks like it may have run a little too much and need a bit of a rest, maybe a little consolidation. If it did consolidate, it'd draw a nice bull flag, right at kind of that resistance. So maybe there's something here for continuation, but certainly wouldn't be jumping into that. What else should we look at? Oh, ITA, here's the Aerospace and Defense Etf. And obviously that has done well, but that has run out of steam. Here's, it's kind of a messy, wide range bull flag, but there could be something here if it breaks out above this. So that might be worth keeping an eye on, especially if things get worse over in Ukraine, or European countries, United States starts talking about sending even more arms to them. So yeah, there's potential for more, but I don't know. I think the easy money in this one has been made. We should look at semis because they're really important. And they are not doing great at all, right? I mean, they're chopping around. They didn't even really go up much like a lot of other things did. When everything bounced really strongly after the invasion, these didn't do much. They kind of got their losses back and is still kind of consolidating in here. So yeah, definitely a troubled sector at the moment. Will be an opportunity one day, but there's no reason to be jumping into that now. Cloud stocks do well, and then they've really pulled back. They really pulled back today, probably because a lot of them are small growthy stocks. But hanging on to that consolidation range, but just barely. Yeah, I'm not terribly hopeful on this, unfortunately. And the one that kind of surprised me today is KWeb, the Chinese internet, made a new low today. So this is continuing its long downtrend. And that's surprising. And this is a big down day for them as well. So this sort of, confirms the risk-off sentiment in the market today. I think I've gone through all of the most interesting sectors. So if you guys have anything you want to look at or have any questions about everything we just went over, happy to answer your questions. Go ahead and unmute or throw some questions into the chat. Nobody's got a stock they want to look at? Maybe CLF. Okay, Cureleaf, right? Did they have earnings today? I know I saw them on the earnings list. I'm not sure if that's today or tomorrow morning. They did have earnings. That looks like today. We should probably look at a, were there earnings this afternoon or were they?
I think that's the wrong one. It's CLF. You put CRULF.
Oh. Thank you. Cleveland Cliffs. All right.
So I had some UOAs came in on them earlier today, like around 1.
Okay.
So I bought into those. And they actually, I bought it, sorry, at 169, and I played it to like 184, but then it started, yeah,
Wait, I'm confused.
started dipping on me.
Have I got the right stock?
CLF?
Yeah.
Yeah.
You said 169?
No, I meant the price, what I bought in at, like how much the option was worth.
Oh, options. I'm sorry.
I'm sorry, yeah.
Okay. Yes, that makes lots more sense now.
So I'm just wondering if I should hold the rest, because it was like the UOA that came in is for May 20th.
Okay.
The 29 call.
Okay.
So I don't know. Kind of scared me today. But I did make some money today.
Nice. So yeah, obviously you see this resistance overhead, right? If it's going to go any further, it's going to have to break through there. I think the most likely thing to happen here really is sort of consolidation right up here under resistance. I mean, what we don't want to see is what we saw last time it went up there, right? See how it went up fast, hit it, and just turned right around instantly, right? If you see that kind of action, you probably want to get out of there pretty quick. But if it came up and consolidated a nice little tight consolidation in there, then it might be worth hanging on. How much time do you have in those? Are they the month?
Yeah, so that's the good thing. They're for May 20th. So I have
lots of time. Okay,
time.
cool.
Yeah,
But you don't want to give a whole lot back either, right?
exactly.
So you're definitely wanting to see a tight consolidation. Probably, you'd want to see it consolidate not
Like
much
stay there,
lower,
right?
not
Yeah.
much lower than the close of today, right? But certainly there would be nothing wrong with it consolidating in here. And in fact, I would say it's healthier than it just going up and breaking through, because I bet you if it breaks through, it pulls back anyway, because it's used a lot of energy already. So that looks good. I just want to look at this on a 5-minute chart. Oh yeah, look at that. Nice. Yeah, good. Look at the volume increasing all the way up there. Wow, that's awesome. Just, I mean, the volume just coming in and coming in and coming in all the way up. That's fantastic. And it basically held, right? It's, shouldn't be surprising to see some profit taking, especially after it kind of tried to break through and fail to consolidate. Yeah, once that little consolidation right there fails, the day traders are going to bail out of that. But it looks like a lot of them went back in, and people are definitely holding this overnight.
Yeah.
That's good, right? And look at, and it moved up. Basically, it got above that level in the after hours. Yeah, I think you've got a nice trade on here, Kelly. No, there's nothing here saying this won't continue some more, other than, we go back to the daily, and the limiting factor is this, 2640 to 50 area. Could be a problem tomorrow. But yeah, I think they definitely try and stay in that as long as you can.
Okay, thanks.
Yeah, no problem. Anybody else want to look at anything? Or maybe DTG wants to tell us. So my bias for tomorrow, okay. My bias for tomorrow is we start going down in the morning, and eventually they buy the dip, but that just turns it into a choppy day. I think we're going to be ranging around. I mean, if I had to, if I had to guess where we end up, well, I'm actually not going to guess where we end up, but I wouldn't be at all surprised if we come down and test the lows or the, the opening ranges from some of these candles. So that'd put us in the 431 to say 433 area. Or 430, 431, 432.50. Come down to there, bounce off of there, and just sort of chop around and, finish inside the range of this green candle here. I think that's probably the most likely outcome for tomorrow. Oh, wait, we've got jobs number tomorrow morning. I'm pretty sure. Let me double check that before I give you bad information. Yeah, non-farm payroll. Yeah, exactly. Yeah, so that's a big wild card for the morning, right? And that comes out before the open. That should be at 8:30. Oh, it's revised non-farm. This is odd. So unemployment claims, revised non-farm productivity, and revised unit labor costs. Okay. So not as important as usual on that data, but unemployment claims are going to be fairly important. So yeah, that could set the tone for much of the day tomorrow morning at 5:30, an hour, or sorry, not 5:30, you're 8:30, an hour before the market opens. So, all right. James says, all TA has just been getting ruined last week or so, thanks to constant headlines, quite frustrating. James, that is an excellent observation, because this really is totally true. And when we get into a market like this, where it's just all headlines, the TA kind of goes out the window to a degree. It does come into play intraday, but it can absolutely be overwhelmed by headlines. So it definitely makes it more difficult. You've still got levels to watch and everything, but it becomes more difficult because those levels you're watching, it's a lot easier to break them, right? Okay, so hopefully DTG, that answered your question for my bias tomorrow. I think it'll be a red day, but I don't think it's going to be super red. But I'm going to be open-minded because these numbers before the open tomorrow. Hang on, I was looking at the wrong one. What do we got? Actually, I'm sorry, I was mistaken earlier. These non-farm payroll numbers tomorrow are the important ones. It was the not so important ones that came out today. So yeah, big numbers in the pre-market tomorrow. So yeah, that's the wild card. And it could change everything. Those numbers come in really good, and we start off green. We could end up having a really green day, and even break out above today's level. But I kind of doubt it. I'm definitely not leaning that way. So hopefully that answered your question, DTG. I see that James would like to look at PayPal and Square. Are you really going to make me look at Square? I don't want to look at Square today. Okay. I see I drew some squiggles onto PayPal 2 weeks ago. And to some degree, those are being fulfilled. James says, fill the gap. Oh, this gap up here? I think it's going to be a long time before PayPal fills this gap. So last time I drew these squiggles because I was showing, what I expected to happen. I expected this would have a long consolidation. There's nothing I see right now that changes my mind on that. I really don't think it's going to break that low. It may come down and test it in the next couple of days, but I really don't think it's going to break. I think the most likely thing that happens here is, like I drew before, we get a consolidation. Oh, Jane says, sorry, he was looking at Square. Good. Yeah, because this gap is so far away from where this is right now. This really needs a change in sentiment in the entire market before it's going to go up and even start thinking about testing that gap. Yeah, sideways for PayPal. Square. All right. And this is interesting. So obviously we had a really ugly day today. We were down 8%. So what happens next, right? We've come down, hit the 21-day moving average. Didn't really bounce off it. It did hold though. This really looks like another down day, and I fear that we have to come down and test 100 again. So you're talking about that gap there, which we should probably draw in because that's going to be important. So yeah, okay. So do we come down tomorrow and test the top of the gap and bounce off that? You know, that should be the first thing we're looking for, right? I mean, after seeing a big red day like this, after failing to break out, right? So we fail to break out, we have an indecisive day, we come down a little bit, draw a little hammer, so this is good, right? I mean, you know, probably went into the day thinking, okay, we got a little bit of a hammer there, this is good. It tried to go lower, it couldn't, they bought it right back up. And then today they just sold it. I bet you if we look at a 5-minute chart, this is just pretty much straight down all day. Yeah, there you go. So yeah, they sold it right down to that 21 EMA and the gap below. So first thing, step one tomorrow, it probably comes down to test the gap. If it goes into the gap, then it's probably another really ugly red day. I don't see it coming all the way down to 100 tomorrow, though. I mean, that'd be like, you know, that'd be a 12% drop or something to get it down there. I really don't see that happening. I bet you there's some buyers at the top of this gap. So let's keep our fingers crossed for that, being long-term investors, right? And if it does come into the gap, then we look at this 100 level, and that 100 level is really kind of the line in the sand. That really has to hold. If that doesn't hold, then our next line of the sand below that's the bottom of the gap, and that should hold. And if that fails, then all the way down to here, I just can't see this coming back and testing this again. It really shouldn't. The whole market, I think, would have to be falling apart for us to come down and test this 80, what was that, 83.50 level. Just don't see it. Worst case scenario, I'm saying 100 holds. So there we go on square. Kylie would like to look at X, US Steel.
Yeah, I had a great run today. I bought some cons for like 180, and they went to like 230.
Cool.
And then I got scared.
Well, yeah, I mean, you know, you can see, you know, what was, the former all-time high, or at least 1-year high right here. It did get through it. That's interesting. You know, but yeah, it's a good reason to be scared. This has had a really good run, and it's done it without really much of a rest, right? And there should be resistance at this area, and you know, in this zone, it did break through it and closed, you know, very near the highs. So this could have another good day tomorrow. Did you get all the way
Yeah,
up?
someone says they see 33.
Sorry?
So that's kind of what somebody said, they see it going to 33. So that's kind of why I'm thinking, should I play it again? Or I don't know.
So why 33?
I don't know. He kind of just blurted it out. He's like, this is going to 33.
Okay.
But if you look at the 5-minute, you can see why I got out. Like there was, you know, it took a nice little dive at one point.
So it had this move to 34%. And then, you know, I don't know if we measure from there or if we just sort of ignore that invasion day and measure from here. Either way you look at this, you know, this leg now is around the same length of that previous leg. So, you know, this is we're definitely in a zone where we want to be watching out for this, you know, slowing momentum or a blow off top. But, you know, this does not look like a blow off top yet, but I would definitely be on the lookout for one, or a consolidate, draw a bull flag. You know, maybe, you know, something like it did here, right? So yeah, yeah, just be careful. Or you said you're out of it, or are you all the way out, or did you hang on to some of those calls?
No, I got all out. I was just
Okay.
wondering, should I play again with like longer options?
I don't know. I'd wait for it to stall
Start
out
consolidating,
first.
right?
Yeah, if it drew a full bull flag, then I'd definitely play the bull flag on it. But yeah, I mean, this had such a great run. I mean, from 18 to 31 in a month and a half, that's huge. There's going to be profit taking in this thing soon. So you're probably better off being out. Is this SWBI? That's not Smith and Wesson, is it? Oh, it is too.
Yeah. So I bought shares in this. I didn't play options,
Okay.
but I don't know. I just was wondering if I actually got in. I bought them today. It would be nice to see that gap filled.
Yeah. Okay, I'm going to try and be. I'm going to be try and be unbiased. I'm Canadian, so I hate guns. I hate gun companies. So, okay, so there's our gap. It's building a nice base for 3 months. It's done a really good job of, of supporting down in this level here, right? So let's draw that. Yeah, quite the range. It got up here and just, a little shy of getting to the gap, and we had a red day. Although, considering the kind of day the market had, this is still pretty healthy right here, right? So, if this was, again, consolidate for a couple of days, make a little bit of a bull flag, have some power to get into this gap and maybe keep moving. I could see that happening, but this definitely looks like, it's bottom-ish. And, you guys are having an election in the fall, right? And I think gun companies do well in elections, don't they? It would
Well,
make
that's
sense.
weird. I didn't know that.
2016, what happened after or during the 2016? So it was just running up all the way. And then where's the election? November. Interesting. You'd think with a Democrat getting elected that I thought Americans love to buy guns after a Democrat gets elected. I know they did after Obama was elected. So that's interesting because that just fell right off. I guess because maybe Biden isn't considered a gun control guy at all, is he? So maybe that's why it fell off. Yeah, I don't know. Maybe I'm just talking on my hat here. I have no idea what I'm talking about when it comes to American gun politics. But the stock itself, I mean, it does look like it's going to break out of the space and break to the upside. There's no reason to believe that this would go lower. I mean, it's managed to hold this range, through everything that has gone on lately. So yeah, I think that'll hold. So your worst case scenario in this really is like, it moves down to 16 and moves down to 16. You probably just want to buy more of it, in my opinion. But you might have to be patient. This range could go on a lot longer too, right? So yeah, maybe needs patience in that one.
Okay. Yeah, that's why I bought shares.
Yeah. Yeah, this is. I wonder.
I mean, I honestly bought them because of the whole war thing, but maybe Smith and Wesson isn't the right thing. I don't know. I was just trying to.
Yeah, if it was about the war, yeah, Smith and Wesson wouldn't be the right play. I think Smith and Wesson is really more about sort of internal turmoil within the U.S., right? Because I know they sell guns to government, obviously for the police and maybe small arms for the armed forces. But I imagine that the majority of their customers are just individual citizens. So, if there's turmoil within the country, like there was back at the beginning of January this year, or not this year, last year. That didn't pop up around the inauguration. That kind of surprises me a little bit. A little bit of a move there, around or after the inauguration, but not much. But yeah, I would think that, anytime they start talking about gun control, this is probably when this pops. But more so on earnings with this one. Up big on earnings here and down big on earnings here. Yeah, I don't know. you'd have to maybe look more and really take a deeper look into this company and figure out what its catalysts are. Because I'm seem to be dead wrong. Every time I think there's a catalyst in this company, it's sort of proving me wrong. But when you're looking at war, you want to look at companies like Lockheed Martin.
Yeah, I played
Right.
LMT.
You know, this is a great one for, you know, global strife. To some degree, Boeing, you know, because they're definitely a defense contractor. Although they've, you know, well, Boeing's Boeing. They've got so many other problems. Northrop Grumman, I think it's NOR. No. Anybody know the ticker for Northrop Grumman? Oh, is it NOC? Yes, cool. Northrop Grumman is another good one for, you know, to get in as soon as it starts looking like there could be a problem. This
Oh,
is
that's nice. What do they do?
Northrop Grumman. They're a defense contractor, so they make. I know they make drones. They make big drones. I'm pretty sure they make one of the fighters or bombers, and I think they might make tanks. But your typical defense contractor kind of stuff, and probably some sort of space hardware too. Most of these guys, you know, kind of all do the same stuff, right? But you know, it's all government contracts, and contracts for you know, NATO partners, allies of the U.S. But again, you know, you're too late in this one. And just comparing the two charts between this and LMT, it looks like LMT was definitely the better one to have gotten into, and maybe the better one overall. This has run up a whole lot more. Okay, that's enough guns and war for one day. Sorry, Callie.
Thank you, Kevin.
You're welcome. What else? James is saying fill the gap. Sorry, I was looking at Square. Oh yeah, okay, we did that. And DTG wants to look at Tesla. Yeah, Tesla's not been doing great. Well, interesting. Okay. I haven't taken a close look at Tesla in a few days. I knew it's just was kind of chopping around a bit, but it's interesting the way it kind of, like, you know, fell out of the support zone. And I think the support zone, yeah, it does. It goes back to here, right? It's defines this range that it was in. And then we can see we broke out of the range, came back, tested that support, tested it again, broke through it instantly, went back up. But this time, you know, when it broke through, it stayed down longer and much deeper, popped right back up. And now it's having trouble getting above that breakout zone. This is the one we were looking at, or actually DTG pointed this out in the short-term trading channel a few days ago. He pointed it out on the 65-minute chart, was basically seeing this bull flag. And I think it was right back here. I think there were only like four or five candles on that bull flag, right? And, you know, yeah, tried to, like you said, you just said in the chat, you know, too many fake outs, right? So it tried to break out, pulled right back instantly, you know, tried to break out again, pulled back instantly, tried to break out again, pulled back instantly. Too many fake outs. But that flag is still there. It's getting a little long in the tooth, and it is starting to break to the downside. But there's kind of like a little mini hammer here on, you know, at the close today. And right above the 50 period moving average on this 65-minute chart. So it's sort of still there, but you know, like I've been saying in the channel, it's really hard to trust a breakout on this one now. And you know, maybe we've got to move that breakout level up a little bit. You know, I mean, I don't know if that's going to help moving the, you know, putting your trigger right up there, kind of. You know, you can see where I had a or have an alert, right? which was, you know, above that candle and this candle, because I didn't play that first one because I had a bad feeling about it. I think if we look actually at I actually remember now, we should look at a 5-minute chart, and I'll show you why I had a bad feeling about it. Yeah, I totally remember. So yeah, this was the first breakout right back here. So this is the day that Richard mentioned it, because he had seen this consolidation here, right? And it looks sweet. It looks like a sweet bull flag. And it kind of went up. It failed to break out, pulled back, and then really started to go here, right? So we had a nice little consolidation down here. It's going, but I'm watching this and I'm like, this is just using too much energy getting up into this level. You know, it'll probably break out, but what happens next? And sure enough, you can see, we used up a bunch of energy. It was great. If you got the breakout down here, beautiful, really nice trade in there. But it comes up here, it breaks out, and no doubt a lot of people broke the breakout or bought the breakout above that level. You know, goes up a little more and just runs out of steam, and then starts pulling back, and it's right back into the range again. And then this is what I want. 2 days later, tries again, can't do it, right? And pulls right back. By this time, people are becoming really disillusioned with this thing. And certainly now, you know, and it just keeps going and trying and failing. So yeah, I don't know what it's going to take for this to break out over this level. But that one's going to be, a tough one, I think. So back to a daily. Oh, and Richard says we have a small gap below. Small gap on the 65. I didn't notice that. I don't see it on the daily. No, not that gap. Oh, this gap here, maybe you're talking about. Yeah, I mean, I can see if it continues down, I could see the bottom of that candle acting as support. There could be a play off of that level, actually. Let's just draw that in as a gap then. Oops. Come on. There we go. It didn't quite hit it. That's better. Yeah, I could see this gap zone acting as support if it comes into here, you know, because you had this kind of, you know, this little bit of a bull flag here, and then gapped there and everything. Traders should be watching that level, and it's just above 100. You know, there'll be people who want, or sorry, just above 800. There'll be people who want to front run that 800 level. So what is that one? 110 to 117. Yeah, that's totally plausible. That if this does come down, we see some support here, and there could be a scalp or a day trade in that off of that level. So that'd be worth watching if it comes down into there for sure. All right. Do we have anything else? Any other tickers? If not, I think I'm kind of running and my voice is getting kind of done. So I think we might pack it in. Yeah, and usually at this point in time, I talk to everybody about what's coming up, but I don't even know what's coming up. Let me grab the calendar here. We can look and see what we have next. I'm just grabbing the calendar from over in the Discord. There we go. So here we are today. So, nothing coming up for about 10 days. You can see Nick's got the next session is on the 13th at noon. And Nick's going to be doing some fundamental analysis on something. I'm not sure which. Maybe we get to vote on that. I'm not sure. And then, of course, 2 weeks from today on the 17th, I will be back doing Ticker Talk. And then the week after that, I'll be doing the third part of the options sessions. So that's what we've got coming up. I'd like to thank everybody for coming out today. Hope everybody enjoyed this. Hopefully it was helpful. And I will wish everybody luck tomorrow. Be safe. like we said earlier, probably going to be a choppy, slightly down day, but really depends what happens with those job numbers first thing in the morning. So have a good night, and I will see you all again soon.
Thank you, Kevin.
You're welcome, Kelly.
Kevin.
You're welcome.